Welcome to this video on other government resources. In the previous video, we have looked at tax revenue, for example, from property taxes, income taxes, or consumption taxes. In this video, we are going to look at user charges and license fees. User charges are usually the price on voluntary purchased but publicly provided services. For example, if you're purchasing a bus ticket, then this is considered a user charge. There are also license fees, which basically means that the government sells a license to engage in an otherwise restricted activity. So for example, a license fee to purchase a driver's license would be such an example, because without a driver's license, you're not allowed to drive. Examples of local government charges are, for example, in a sanitation or public utilities room, in the sense that you have charges for trash collection, for landfills, or for sewage services. In terms of public utilities, regarding water and electricity, you may have to pay a connection fee, but then you also have to pay the consumption of water and or electricity, for example. Of course, the same is true for natural gas. You also have transportation and parking charges, for example, subway and bus fares, or when the city has built a bridge and you have to pay for the bridge to actually cross it in terms of road tolls. In Indianapolis, you do not have that anymore since the city has sold their parking spots. But in other cities, you may also have parking meters and parking lot fees. And those are all examples of local government charges. Now here, when you're looking at license taxes, remember that licenses allow you to engage in an otherwise forbidden or restricted area. I have taken the largest 10 states in terms of population. And I have also included Iowa in here. So you have you can see that there are significant variations in terms of license tax revenue. For example, you have New York that has a very high revenue as a share of the license tax revenue associated with vehicle registration. Whereas in Ohio, this share is relatively small. But then you see that for the majority of states that you have revenue from vehicles, vehicle registration, and also associated with occupation and businesses. So let us talk a little bit about user charges. Remember that user charges are the price for a publicly provided or publicly produced good. So here, what we need to identify the purchaser of the good and services at the individual level in order for that person to pay the user charge. Charges are usually linked to the frequency and the volume of usage, and it can also serve as a means of controlling the consumption. So for example, before I have talked about the toll for a bridge, for example, or for a tunnel. Then in times of congestion, you can increase, for example, the price in order to discourage users from using the bridge or the tunnel to reduce congestion. Examples of the user fees, we have seen this on the previous slide, or user charges, are, for example, also if the city owns recreation facilities. In order to impose user charges, you actually have to make sure that you can prevent non-payers or non-payers from consuming the good or service. In the sense that, and this comes back to one of the first lectures where we talked about the role of government, is that the good needs to be excludable, in the sense that you can exclude people from using the good. But of course, the exclusion must be cost effective. Note that user charges are the closest financing mechanism in the public sector to private sector pricing, in the sense that you are purchasing the good. Now, in order to be a candidate for user charges, there are some considerations to take into account of what are suitable services. So Services that are usable to have user charges, they have to be measurable in the sense that you can measure the usage of the service, and you can also measure of how much people actually use. It has to be excludable in the sense that non-payers can be excluded from using the service. And there also has to be an individual benefit to the purchaser of the service. Now, the reasons to impose a user charge, and we're going to look at this a little bit more later when we're talking about the advantages, is also that user charges usually reduce the reliance on taxes. It also, since it is a price on a good, and people pay more the more often they use it, it can also serve as an encouragement to conserve the resource. As mentioned before, in the example of the bridge or the tunnel, then it can also be used as a congestion management tool. In addition, if people from outside the taxing jurisdictions use the good, then this would serve as a revenue source as well, or in the sense that if you have tourists using the bridge or the tunnel, then they would pay the charges as well, and it would not only be financed by the residents of the jurisdiction. Next, let us look at the advantages and disadvantages associated with user charges. So the advantages are that user charges represent additional revenue for the jurisdiction, and that you can register the service demand in the sense that it is a measurement of how the service is actually the good provided by the public, how much demand there is actually for that good. Since this is closest to what you would see in private industry, there could also be an improvement of the operating efficiency, because the agency that is providing the good has to respond to demand. It can also improve the financing equity for selected services. For example, if you're talking about a park or a zoo, because the service is going to be used by many people, and some of them may actually not contribute to the provision of the service if it was financed by taxes. So, for example, if you have non-residents using a zoo, for example, or if you have tax-exempt entities using the zoo, then they would not be contributing to the service by taxes, since they are not paying taxes in the jurisdiction. This also means that the financial burden is shifted away from local taxpayers. The disadvantages are that some of the benefits may be extending beyond the principal recipient or the person purchasing the good. So, for example, if you are purchasing sanitation, or if you are attached to the sewer line, then that also has positive externalities in terms of public health. User charges may also produce a regressive burden, in the sense that if the user charge is the same for everybody without means testing for income, then this could add to the regressiveness of the tax. And we are going to talk about this in a bit. When we talked about utilities as being subject to user charges, such as electricity, natural gas, or water, then of course, if you are denying the service delivery to non-payers, then that can be potentially problematic, in the sense that if non-payers, for example, are low-income households, and you are going to you're going to deny them service, then this may be a fairness issue and equity issue. Now, here are some design considerations for user charges, and some of them we have talked about before, in the sense that you of course have to be able to measure the output, in the sense that there has to be a practical measure of how exactly do you measure the output, or do you measure the service delivery, in the sense that with a zoo, of course, you can control the access to the zoo, and you can measure of how many customers or how many consumers are coming to the zoo. We also talked about that it has to be feasible to exclude non-payers, in the sense that the question becomes of how easy is it to actually avoid the charges. Another design consideration is the extent to which the user charges actually covers the service provision or the goods provision. In the sense that, do you have users or do you have beneficiaries pay for the entire provision of the good, or are you going to look at the user charges as a subsidy that is only partially covering the service provision? So you can think about, for example, if you have a large bridge that you are building, or a large tunnel, then this tunnel may be very expensive, and you would know that if it was only based on user charges, that the user charge may have to be very, very high in order to cover the entire bridge construction cost and maintenance cost. And this may actually then be discouraging the use of the bridge altogether. So there are certain trade-offs of depending on how high the user charge would actually be in order to cover the cost. Of course, and we talked about this before, there could also be externalities associated with the use of the service. There could be, for example, a public health benefit, or there could also be a pollution. There could be a negative externality such as pollution. And those externalities you would have to price into the user charges as well for an efficient resource allocation. Another design consideration is if you are going to vary the user charge with the volume of usage and also the time, for example, time of day or time of season. So when you are varying the user charge with volume, that could be, for example, the case if the more people use the service, then you are actually having an increasing marginal cost per unit of output, in the sense that it becomes more and more expensive to actually provide the service with each additional user. Variations in user charges by volume could also encourage conservation, in the sense that if the charge increases with more usage. We talked about before, when you have, for example, a positive externality and you want to encourage the use of the service, then of course the user charge can also be designed such that there's a decrease of the charge with usage. You can not only vary the user charge by volume, but you can also vary it by time of use, for example, day or week or month. And this may be warranted if, for example, there is a significant variation of the service demand over time, okay? Or even if there's if there's a uniform service demand over time. In the sense that you may have capacity constraints of the service at peak times. So think about the zoo example. When you have a zoo, then it may be, if it's a weekend in the summer and you want to shift people from the weekend usage in the summer to the weekday usage in the summer, then you may adjust the pricing to have it cheaper during the weekday. And of course, this relates to the ability and cost to add capacity at peak times. Now, before we mentioned variation in user charges by volume and by time, but it could also be user charge variation by type of users. And here we are looking at two types of users, in the sense that we know, for example, that senior citizens, children, students, that there are differences and variations differences in the willingness to pay for the good. Okay. In industry, knowing that there are consumers that have different valuations of the goods and difference in willingness to pay, that leads to price discrimination in private industry, and this price discrimination actually leads to higher profits. It could also be the case that there are differences in the unit cost of providing the service depending on the type of user. Now, we can also have, and we mentioned this before in terms of equity issues, There could also be a differentiation of the user charge based on the ability to pay of the user. In the sense that you would have to engage in means testing of the user charge. So for example, if you are a city that is providing electric utility to users, then this could be means tested, or you could have engaged in a program where low-income households would actually be paying a lower connection fee than other households. There's also the consideration of how do you treat residents and non-residents, because here the issue is that if the public good is partially subsidized by taxpayers or by tax revenue, that means that non-residents already paid for part of the service provision of the public good, or the good provided by the public. This is similar why you would have, for example, in-state versus out-of-state tuition for most universities, since the taxpayers that reside within the state have already contributed to the university. The example I have here is the Memphis Zoo, where they have the free Tuesday afternoon guidelines that said that Memphis Zoo allows free general admission to Tennessee residents with ID on Tuesdays afternoon from 2 p.m. to close, which is an indication that the Memphis Zoo has actually been partially subsidized or partially paid for by the tax revenue. There could also be the use of a two-part user charge. Now, this is something that you see very often with respect to utilities, where you pay a connection fee or you pay a fixed amount to be connected to the energy system, the electricity system, electricity grid, for example, but then you are also purchasing the electricity on a per kilowatt hour basis. That fixed fee then could serve as covering the depreciation for the capital component of the service, for example, the electric transmission lines, and the variable charge per unit is then equal to the kilowatt hours that are used. The advantage here is that you have a coverage of the full cost of the service provision, and then you're also making efficient consumption decision. But it also is possible that the fixed fee is likely going to be very regressive, in the sense that if everybody has to pay, say, $40 per month in order to be connected to utility services, and those $40 per month are not based on income of households, then since $40 are much more in terms of percentage of low-income households than high-income households, that would add to user charges being regressive. And now, lastly, let us have a look at the evaluation of user charges based on the criteria that we have seen in previous videos. Now, just to recap before we start, is to remember that the good that is provided by the public, or the service that is provided by the public, that it measures the demand for the service in question, or the user charge can measure the demand for the service in question. And it is also an expression of preferences by the users if they're using the good or not. And as long as the service is in demand, then the service is also going to be provided. The advantage of the user charge is also that the service provision is independent of fiscal shortfalls, since the financing of the service is actually done by user charges and not by tax revenue. But then we also have to keep in mind that agencies that are providing the service, they actually have to respond to consumer demand. The advantage is also that this removes the service from politics, so to say, because the legislative body would not be responsible for appropriating funds to the service. Now, in terms of efficiency and equity, remember that efficiency measures whether the charge is providing an incentive or it's distorting prices and distorting economic decisions. So, for example, if you have the user charge for the zoo visit, then what type of economic decisions are distorted there, if at all? It's also possible that you actually have an increase in the operating efficiency of the good and service provided, because the agency has to respond to the economic incentives or the economic demand of the service by the users. We talked about bridges and tunnels before that could be subject to user charges. This would be an example of the benefits principle, in the sense that only those households that are actually using the bridge or the tunnel are subject to the user charge. Now it gets a little bit more complicated when we talk about the horizontal equity of user charges, because here we have the first problem is if you are comparing all the households with the same ability to pay, or only the households that are actually using the service. And there may actually be a reason why the people with the same ability to pay are not going to use the service. So there may be a distortion in the measurement of horizontal equity. Also, in terms of vertical equity, we mentioned before, if there's, for example, a two-part tariff, or if the user charges are not differentiated by type of users in terms of the willingness, in terms of the means to pay, then the user charges can also be regressive. They could also be progressive depending on the design. In theory, the user charges should be adequate to cover the service provision. But again, we mentioned before, for example, if there's a bridge that is very intensive in terms of initial capital cost, then the user charge may actually not be adequate to finance the entire good. In terms of elasticity, if you have a growth in income, are you going to have a higher demand of the good? You could think about this again as, for example, the zoo visits. Are people going to use the zoo more if there's economic growth or not? If you're thinking about the bridge example that is using toll roads, that is using tolls, you can also think about if you have a low economic growth that leads to unemployment and fewer people are actually using the bridge, then that would also be a reduction in the bridge revenue. And lastly, and this is related again to the stability that we have mentioned before, for example, with the economic growth, is how stable will be the revenue from the user charge from the service. You can think back about the zoo, then it is likely that the revenue is actually much higher in the summer than it is in the winter. So the revenue is relatively stable in the sense that when you're looking at over the entire year, but there may be inter-year variations. So this is the video on that covers some other government revenue sources.